Welcome back to Business Accounting, and this is Lesson 8, and in this lesson we will look at the importance of inventory ordering and holding costs. We will first look at what is meant by ordering and holding costs. Also, why is it important to know how much stock or inventory to have in the business, and then we will also see how to calculate the reordering levels, how to calculate the ordering cost and the holding cost. Now, why do you think is it important for a business to manage the inventory? It's important because inventory is the most expensive item in the business. If you want to sell maybe cool drink, then the purchase price of that cool drink is the most expensive. So therefore, it's really important to know how much stock or inventory should be held in the business. Now, what is understood with carrying or holding costs? With carrying or holding cost, we refer to the cost to hold or to carry these items or this inventory. Now, first of all, what is included? We will say the purchase price of the inventory. That makes sense. That is a holding cost or a carrying cost. Then also the opportunity cost. And you will remember that opportunity cost is if you use the money or the cash to buy inventory, you can't use that same money or cash to buy something else or to do something else. So the opportunity cost is the cash that is tied up in the inventory and can now not be used for something else. And then you have also other costs involved. That can be your insurance. You can take out the insurance policy on your inventory. It can be the storage cost. You must have a store or some place, a premises to store the inventory. It can get damaged, so there's a certain cost involved if the items got damaged. And then also all the admin cost involved in carrying this inventory. Now, what is understood with ordering cost? This is the admin cost to place orders. Remember, whenever you place an order, there's certain costs involved to place that order. And then also the transport cost involved to place orders. Now, we said it's important to watch your inventory levels. Now, what is the disadvantages of if you have low inventory levels? Now remember, if you have low levels, it means that some customers would like to buy something and maybe you don't have that item. So then there will be a loss of business because you can't sell to these customers. Also, now you need to order inventory. You must make a special order for inventory, and we call those emergency procedures, and that will cost you money. So the disadvantages is you will lose out on business because you can't meet your customers' demand, and then also the procedures or the cost of doing special orders. Now you can guess what's the disadvantages of holding high inventory levels. Your holding cost will be high, the cost of your capital that's tied up in inventory, and then also some of your products can become obsolete. So maybe you have products with a shelf life of 2 months. If it's older than 2 months, you will have to throw it away. So these are the disadvantages of holding high inventory levels. Now it's very important because we spoke about ordering costs and holding costs. But how do we calculate those? So I will quickly give you one example. I will read out the information and then we can do this example. So a company uses components at a rate of 6,000 units per year, and these components are bought at a cost of $120 per unit. So they use 6,000 per year and you buy it at $120 per unit. So this is the cost price. The company orders 1,000 units at a time, and the average inventory held is 500 units. So this is saying that when the company places an order, they order 1,000 units each time, and the average inventory held is 500 units. So on average in the store you will find 500 units. It costs $20 to place an order. So this is the ordering cost. The ordering cost, the admin cost to place this order is $20. This is irrespective of the quantity. So whether you order one item or 1,000 items, you will pay $20. The total holding cost is on average 20% per annum of the average inventory held. And your average inventory was 500 units. Now you are required to calculate the ordering and the holding cost of inventory. So I will say my annual ordering costs equals my annual usage. Now where can I find my annual usage? I've said there that the company uses components at a rate of 6,000 units per year. So that is my annual usage. So I can write that down. Annual usage is 6,000 per year. Okay. Then divided by my order size. Where do I see my order size? The company orders 1,000 units each time. So that will be my order size. Okay? And then times my cost to place an order. And the cost to place an order was $20. So then it will be times 20. If you do this calculation, I will quickly do this calculation. Then I will get 120. So this means my annual ordering cost equals 120 Namibian dollars. If we compare this answer with the information that we got, and we said that it will cost us $20 to place an order, and if we are saying the annual order cost is now 120, so now you can see how it relates then to the cost to place a single order. Now, if we look at annual holding cost, I'm saying my formula is average inventory held. So where do I see my average inventory held? My average inventory held, I can see there is 500 units, and then it's the cost per unit. What is my cost per unit? My cost per unit is 120 per unit times my holding cost in percentage, and it was given to us as 20% per annum. So I can do this calculation. So I will say average inventory held was 500 times the cost per unit was 120 equals, if I take 500 times 120, I will get 600, and then times 20%. So then you will see my average or my annual holding cost is also 120 Namibian dollar. Now we want to know when to reorder. Remember, we must have optimal stock. So we should not have too much stock and also not too low stock. So when should we reorder? Let's look at this example. A company uses a certain component at the rate of 1,500 units of this component per week, and the time to receive an order is 5 weeks. So now you can see that we are talking about weeks, 1,500 units per week, and to place an order will take us, or to receive the goods will take us 5 weeks, and the reorder quantity is 12,000 units. So when should we reorder? And we are saying the calculation, there's the maximum usage. So what is the maximum usage? That is the 1,500 times. And when we are referring to lead time, it means the time to receive an order. So our lead time in this example is 5 weeks. So if we do that calculation, it's 1,000 times 5 equals 7,500 units. So I'm saying when I have 7,500 units in the store, this is when I need to reorder. So this is then the end of the lesson. During this lesson, we looked at holding costs. We also looked at ordering costs. We looked at why is it important to have the right levels of inventory, and we also looked at the calculations of holding costs. Let me just write it there, calculations of holding cost, also ordering cost, and then also when to reorder. Thank you for tuning into this lesson, and I hope that you will also enjoy the next lesson.